I was going to make the analysis of the Warner Bros. Netflix deal from the point of view of two of my mistakes. But unfortunately, a new offer came from Paramount and I had to change the whole analysis. But today, I want to talk about these two mistakes. One of them is a mistake of commission and the other is a mistake of omission. Let's talk about the first one first. I was a shareholder of Warner Bros. Discovery for years. I'm sure you have heard me talk about this company so much, and unfortunately, I have lost money. I'm no longer a shareholder. So what was the mistake I made? I first invested in Discovery actually in 2021, and if you look at the price of Warner Bros. Discovery today, and from the point I bought, I would not break even. Maybe because I bought shares at lower prices, I would be slightly profitable, but I would not break even from my first purchase, which was around $35 a share. I invested in Discovery because I believe it was undervalued, but when it merged with Warner Media, it got a lot of debt on its balance sheet. And this was not good for the company. But still, I kept buying more and more shares because it made sense if you look at the fundamentals. The company was generating cash flows, they were repaying their debt. In theory, this should increase shareholder value. But in reality, this is not what happened with Warner Bros. Discovery. If you look at the operating cash flows of the company, since the merger till 2025, about $19 billion of operating cash flows were generated. $18 billion were used to repay the debt. But the total shareholder value that was destroyed was $8.6 billion. What does this mean? Why did the market not give a higher price to Warner Bros. Discovery, even though in theory value was increasing? It's because first, the business was declining. The linear global network business was declining. And secondly, the business that was growing rapidly needed constant cash reinvestment. I'm talking about studios and especially streaming. So all of this eats cash from the company. And one of them is declining business, which means the value over time will go down. They had a lot of impairment. You may say that in theory, impairment does affect cash flows, but the value of a company are the future cash flows. So even if impairment doesn't affect cash flows today, in the future, the company is going to generate less revenues, less cash flows. They only impair because the value they put on the intangibles on the goodwill is not the same anymore. It's lower. They expect to make less money in the future. And the third point I want to make why value was destroyed instead of created was simply because of limited capital allocation options for the company. When shares are so cheap, it's better to repurchase the shares, but they had to repurchase the debt at a higher price, at a premium, because they had no option. Repaying debt is a priority for such a company when you have such a bad balance sheet. When you have so much debt, it is always a priority because if something goes wrong, the owners are the loss to be paid. So it's better to repay the debt first. That's why the three reasons why value was destroyed instead of created. There are other reasons. And if you want to learn more, please read the full analysis on Substack when I talk about this company. I will put the link somewhere around here. Now let's talk about the second mistake I made, and I told you this is a mistake of omission. What do I mean by omission? There was something I should have bought, but I did not buy, and that was Netflix in 2022. I have been following Netflix for around a decade. It's a wonderful company. The first time I looked at it, I didn't like it. Why? Because it has a cash outflow. I did not understand why the market was putting such a high value on just net income. Net income was positive, but cash flows were negative. And I valued cash flows so much. But what Netflix was doing, they were investing that cash in creating new content, acquiring new content, because this is how the accounting works for such companies. And even for Warner Bros. Discovery, it's like this. They have to create content, they have to buy content, they pay in cash, but it doesn't appear on the income statement as an expense. It is capitalized, and over time, they're going to amortize it. It is an intangible asset. I did not see the value of the intangible assets on Netflix, how they were able to grow subscribers, had the pricing power, the moat that they were creating around themselves. I did not see the value on that. I was focused just on the numbers. I saw the cash flows were going down. That's a bad thing. Bad company not invest in. Of course, I won't say the company was undervalued. I would not have bought but it was a wonderful company that I missed. In 2022, Netflix was undervalued. I should have bought. I didn't buy. You may say that there's something similar with these two mistakes, that I was focusing on the numbers but missing the story. That's why we say that investing is more an art than a science. And at the time, I was more the scientific type of investor. It makes sense. I used to be a physicist, but now I'm understanding more the art of investing itself. You have to understand the story. And that's why I say that the intrinsic value is not absolute. If I had to buy Warner Bros. Today, I put a price on it, how much I want to buy. And Netflix, the price they're paying for Warner Bros., it should not be the same as my price. Because when I buy, I'm talking about buying the whole company. There's limited things I can do with it. Even if I had limited amount of money, there's limited thing I can do with Warner Bros. Assets today. If Netflix buys Warner Bros. Or even Paramount, they can integrate it with their current business. So they can create more value that I could ever imagine. That's why intrinsic value is not absolute. The price Paramount is paying, the price Netflix is paying, the price I should pay are all different. Once again, we can read the whole analysis of the deal, of the offer on Substacks. And if you want to know more about a company that I believe is undervalued, that the market is meeting the story of the company, I will recommend you watch this video next. Have a nice day and goodbye.